All right, what's going on, boys? What's up, Ginger? How you doing? Yeah, I'll do your charts at the end for sure. We'll go over some charts in detail at the end here because there's not too many plays that I did today, so there's not too much to go over. Let's go over SPY here. Obviously, very obvious short squeeze. We were waiting for this short squeeze. We didn't know when it would come. That's why we kept adding small positions of shorts. Obviously, you guys were warned about this. Basically, we knew a day like this was coming, especially with the days we've been having where every night we gap up and then at the end of every day we sell off, right? So it can only do that so many times. But if you go back, like looking at 5-minute charts, today looks absolutely amazing. When you zoom out to the weekly, I'm not saying that we're going to just keep going down. Of course, there's going to be bounces. There's even green weeks on this way down, right? What's up, Ricky? If you guys remember, 4 weeks straight down, we got 2 green weeks. Everyone turned bullish here, January 31st. Bottoms in, bottoms in. Everyone was saying bottoms in. And then what did they do? They rolled it right over. Then we got 3 weeks down, and we got another bounce, couple candles. Everyone saying bottom in, bottom in, bottom in. Then another 2 weeks down. So when is the bottom? Nobody knows. You'll hear it all over. What's up, Andrew? How you doing? If you're looking at a weekly chart, I don't really see a reason for us to get bullish quite yet. Obviously, there's a Fed tomorrow. I've been explaining to you guys in the chat. I hope you understand what I'm saying. When there's an event, a known event like FOMC or something like that, people are extra hedged going into that event, which prevents the market from going down. I know it sounds counterintuitive, but this is a stock market. Nothing is obvious in this game. And everyone being hedged is keeping the market afloat, in my opinion. That's what Vanna and Charm does. It's flows that keep the market from dumping. So if we are to dump, I do not expect it until either Thursday or next Monday. Why Thursday? Because the Fed hedges will probably be taken off tomorrow after they'll probably squeeze the market tomorrow as well. But after they squeeze it, I think all those hedges are going to come off. They're already starting to roll those hedges from March 18th all the way to April. And next Monday we can continue the dump if it wants to do that. Just because I'm saying it, just because there is a downtrend does not mean your shorts are going to work. So make sure your position sizing is right. And if you do not want to sit through some red days, then you're going to have a stop loss and stop out. Because this doesn't affect me whatsoever. I've played this before. I've done this before. I'm fine sitting through a little bit of red. All my puts are for April. And if I wanted to get out, I would have gotten out for small profits last week, but I'm looking for a bigger play here. And we'll see how it goes. But for right now, it's very, very clear. We're in a downtrend. We're trying to base here, obviously. We got Fed tomorrow. Fed can change the whole scenario. All our shorts can get screwed. All of the longs can get screwed. Nobody knows what he's going to say tomorrow. Nobody knows how the market's going to react. If he says 25 basis points, some people say it's bullish. Some people say it's bearish because the market knows inflation is not going to come under control with a 25 basis point hike. Like some people want the 50-point hike. I think it's healthier for a 50-point hike because the inflation's going crazy. But it's not about what me and you think, it's about what the rest of the market thinks, and we'll watch the price action tomorrow and make sure you're awake tomorrow on time because tomorrow's the biggest day probably for the stock market in years, especially with 40-year high inflation. So it's going to be fun. Let's see what happens. And finally, we closed one day on top of the 8-day moving average on SPY, just like we did back here. And then we just went sideways the next day and dumped the third day. And then one day up, and then we're right back down. So the 8-day moving average, look at this. On this downtrend, usually it passes it a couple days and then it comes right back down. So let's see what happens tomorrow. Have to see what the Fed says to give us a signal of what's going to happen in the future. And OPEX is on Friday. Largest in the money options expiration day of the year so far. Triple witch or quad witch, I'm not sure, but it's going to be OPEX. It's going to be wild. Anything goes on OPEX. QQQ, everyone's bullish. Great day today, but look where we are on the overall picture, guys. Very clear downtrend. QQQ is a much clearer downtrend. Why do I say that? It kind of just hugs the 8-day moving average and then comes down. Hugs the 8-day moving average, comes down. Same here, same here. And today, look where we stopped. Before you look at that 5-minute spaceship intraday, look where we got rejected from on QQQ daily. 8-day moving average was at 328.81. Our high of the day was 328.95. So it overshot it by 14 cents and then it closed below it. So keep that in mind. We did reject the 8-day moving average here. We rejected it here. We rejected it here. Rejected, 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 and the last time we closed on top of it was March 2nd. So it's been a pretty clear downtrend. So tomorrow, if we get follow through, we must get over today's high, which 329. If we get over 329, that's follow through on QQQ, and if we close above 329, that's a start of something bullish, but it's still not enough to be bullish in my opinion. XLF, again, there's stuff that's outside of the charts at work here. Why do I say that? Because of the whole huge hedging positions people have going into this FOMC. But again, XLF, big downtrend, finally got over it today. Yesterday tried, rejected. Today we went over it, but we didn't even take yesterday's high yet. So 37.46 is the level for XLF for financials to keep running. And let's see what happens tomorrow. It all rests on the Fed, guys. Like, none of these charts will matter if the Fed does something very, very bullish or if they do something very, very bearish. These charts will not matter. They'll absolutely dump or absolutely just run tomorrow depending on what the Fed decides. IWM basing, since it leads the market down, it's been basing before the rest of the market, and as you see, like, SPY is also starting to base. QQQ still kind of lower lows. We broke the February 24th low yesterday, and then today we held it, but again we rejected off the 8-day moving average. Not enough for me to get super bullish yet, so I'm still in those puts for April, but other than that, just watching, see what happens tomorrow. We might have to sit another day or two before we get those big moves. XLF definitely broke bullish though. IWM basing, again, the only thing that matters to me is 188, below 188 or above 210 will give us the next trend. VIX, quite a bit of pull off as expected. As I said, everyone's hedged. They're gonna have to pull back VIX. It does look like a bearish engulfing candle on VIX, which is good for the bulls. But 30.09, we close at 30. So we just closed just underneath the 21-day moving average as well. First time we closed under the 21-day moving average in about since February 16th. This is the first time we closed below the 21-day moving average. Again, we gotta wait for the Fed tomorrow. ES, as soon as we got over that 42.40 level from spot gamma, held up there, just kind of floated up there, and the sellers didn't want to take it down. RCL, so this is a play I called out yesterday. Obviously, down a little bit right now, but nothing's changed in the chart. Big dump off, bear flag. As long as we stay underneath this top little trend line here, I am not worried about this play at all. We have 2 weeks on it, and I might even add to it on Friday if we get a little bit more of a rally. BNS looks set up to go, even on a strong market day, closed red, and it just looks like it's kind of going sideways here, trying to decide which direction. But these two, all the candles closing below the 50-day moving average. This teal line you see here is the 50-day moving average. The last 6 days we've closed below it. It's tried to get over it for 6 days. It could not get over it, which means the buyers are going to run out of time soon, and I think the bears are going to take this one down. Let's see if we can get down to the 200-day on this BNS. We have till April. Yin is a play I took at the end of the day. Why did I take it? Obviously, very bullish day today. So we may get a gap up tomorrow. If we do get a gap up, I looked at options. I looked at BABA options. So BABA was at 76.50, I believe. The $80 calls, which are $3.50 out of the money, they were going for around $2.40, which is too much. I think it's very highly priced for BABA, especially like on a Tuesday close. But instead of taking an expensive option, I took this yin. Yin is a 3x leverage China bull. I do think China gaps up tomorrow. It's a little bit overdone. Why do I think that? If you guys go to the weekly on yin, this is the last time we closed below the lower Bollinger Band was March 16th. Look at the next week. We went up 12%. And then another 4%, and then another 8%. So that's how it bounced last time it was outside the Bollinger Band. Right here, though, this is the one that worried me a little bit. We were outside, and the next week we kind of just stayed flat, and then the next week we got a 7% move. And we are completely outside right now with last week closing outside. This week so far is outside, so we need a bounce to at least 421. 421 to get back into the Bollinger Bands. And you can see it right here. If we got in at 313, if we get to 421, it would be around 40% play. So if we bounce back into the Bollinger Bands, we get 40% on equity, no burn on premium, and that's why I liked it the most out of all the plays called out. DML, well, I called out DNN, but it's the exact same play. DNN is the American side, DML is the Canadian side, and this is a uranium company. So I told you guys how bullish I am about uranium. I waited for this pullback. We got a pretty healthy pullback. Looks like it almost bounced off the 200-day moving average today. At 175 is 200-day. Today was 178 low. Looks like a nice little hammer candle. Looks like it's trying to reverse. Plus, look at these past ones. So it goes on a huge run, one candle down, and then another huge run. So this is exactly what I'm looking for. If we get that huge run back to all-time highs, we'll have a huge winner in equity here as well. And again, guys, the premium is just too high on all the options, so I'd rather just play equity here. We have JPM and MA. So JP Morgan here. Let's see, this one, like, these charts are not set up bullish, guys. Like, I know they're trying to base down here, and if they do reverse, I'll change bullish right away. But for right now on JPM, what I see is a very strong resistance at 135.50. If we get above 135.50, then I can turn bullish again. But as long as we're underneath 135.50, I'm still bearish on all these charts. JPM being one of them. It's just kind of chopping around down here. A lot of gaps left, a lot of choppy price action. And if it does get back to 135.50 and rejects, it's probably a perfect area to short. Other than that, it does look like it wants lower. Let's see if it can come and test this 127 low here. All the banks are pretty much the same. GS is also trying to form a little base here, but until it gets over 338 here, I cannot turn bullish on it. Same thing with WFC. Just a bear flag, huge downtrend, bear flag, and now do we break down or do we break up? Same thing on XLF. One way to look at it is this little resistance it broke. Another way to look at it is to get rid of this resistance and just look at it for what it is, which is a bear flag. So that's all, like, most of the charts just look like bear flags. I know there's a lot of optimists out there calling bottoms, but you've heard them call bottoms all year and it doesn't really help. Has it really helped? I don't really think it has. It just looks like a big downtrend. Stocks don't go straight up or straight down. They need some consolidation before they continue. It's the same way on the downside. So that's 1 DB we can do. DB, again, another bank, guys. It's just the same chart on all the banks. All the technical analysis on all the banks is exactly the same. So basically, what do we have here? We have I know some of you guys are trial members, so you don't know, but it's very clearly just a bear flag here. If we start to break up, I'll change bullish really quickly, but for right now, it's not, like, I don't think it's very bullish. It's very clearly a bear flag here, guys. So if we do start breaking up, I mean, it'll negate the bear flag. But for right now, with the size of this dump, we went all the way from 1670 all the way down to sorry, $9.46. So 1670 to 946, almost 100% drop, well, 44% drop. In price, you cannot go straight down. Like, if you drop 50% straight, and then how far did we bounce? Then you can check how much we bounced on this bear flag. From the bottom to the top, we bounced 21%. So basically, we dropped 44%, we bounced 21%, and if they roll this over now, it's going to new lows. That's basically the play. This is a very clean textbook bear flag. There's going to be days where puts hurt you, like the market's gonna squeeze. That's why the market's doing what it did today. This was not big boys or institutions buying today. This was all put covering. People are getting squeezed out of their shorts, and once the market gets enough people squeezed out of their shorts, that's when they're gonna bring the real move, in my opinion. UPS, same thing. I mean, I get asked about it every single day. This is a weekly play, guys. I have April 16. As long as it stays under this 214, there's no reason for me to exit the trade. I'm just waiting and watching. If we squeeze again tomorrow, which we probably will, I may add more to these on Friday. I may not. I'm still deciding, but I don't think the real dump comes till next Monday. So if you want to cut them and take your paper cut and get back in later, you can do that, or you can wait and see how it works and add if it starts working. But other than that, I mean, we're just pinched between the 200-day and the 50-day right now on the daily, and we have to wait for a direction. If it breaks over 211, that would be temporarily bullish. If we break below 204, that would be bearish. So just waiting, watching, seeing how it plays out, and I'm not too worried about this one as well. The other one was MasterCard. So MasterCard is a bookie favorite. Got this big broad wedge on here. Call it a, yeah, broadening wedge, whatever you want to call it. Very messy kind of chart, but it has been respecting this kind of range. So every time it gets to the top, you short it. Every time it gets to the bottom, you can buy it. Top, bottom, top, and it only went midway, top, and then short it again. And right now we're just kind of in the middle of the range. I don't really see a play on it here. I know Bookie likes it for a short. Actually, it might be, it's just a bear flag as well. I know the bigger pattern is the broadening wedge, but the smaller pattern, look at this dump. We dumped all the way from 400 straight to 305, guys. So we lost $95 a share on this MasterCard. So the thing is, again, stocks do not go straight up. Stocks cannot go straight down. They have to consolidate, and that's just what it's doing right now. It just looks like a very clean daily bear flag. You go on the Bollinger Bands. Daily MACD is still bearish. It looks like it wants to cross. It's curling up, but we still have that 4-hour bear cross. 4-hour chart is still bearish. Everything's still bearish on the longer term time frames. This little 1-day 5-minute chart looks great. It looks great on a lot of names, but for now, it's still all in a bear trend. It's still all in a downtrend. The hourly is bear flagging, 4 hours bear flagging. Even the weekly, like we've gone down from 1, 2, 3, 4, 5, 6 weeks straight down, and then 2-week bounce, and it's not enough for me to turn back bullish. You might get a better entry on it bearish later this week, but other than that, it's a very clear bear flag, and I do expect lower on MasterCard as well. Other than that, thank you guys. If you're in puts, I mean, don't worry about 5-minute charts. If you're worrying, you're probably too heavy. If you're too heavy, I would probably just cut the position altogether, because you're going to screw up your trade no matter what if you don't know your position sizing. And other than